Welcome to Subramani. Uh, an event happened by which triggered 2-3 videos. Is one is a businessman. What should he be doing? So one of the persons who is associated, I think, his wife's brother or somebody asked me, what should a 40-year-old or a 38, 40, 45-year-old Indian businessman know about personal finance? So first of all, you're doing business to improve your wealth, right? So largely to improve your personal standard of living, or the vacations you take, the cars that you drive, etc. So there has to be a strategic approach to personal finance to ensure that there is wealth creation, there is financial security, and there is long-term stability and a replacement if you're gone, right? So the most important thing I would start, if I met a new 40-year-old businessman, is to make sure that he has adequate life insurance. So what I ended up suggesting is coming at the end, so I'm not, let me not repeat it. So here is a concise guide as to what you should be doing. If you are a businessman, why you should be needing to do this in your personal life. So first of all, you have to have financial planning and goal setting. Now don't tell me that your parents didn't have financial goals or did not have goal setting. They had it, but they had a simple job. They had a simple job which was paying a pension, so they knew what was coming next. Or if they didn't know, maybe they made a mess of it, but there was a joint family which helped them, right? So I'm not getting into all that, but yes, first of all, set clear goals. Define short-term goals, 1 to 5 years, maybe upgrading a car, painting the house. Painting the house, not a big thing, but if you're decided to shift out and stay 1 year somewhere else and get your whole house redone, that could be a short-term goal. A medium-term goal could be children's education, right? And a long-term goal could be selling the business, retirement, and legacy planning, right? All that could be your long-term goals. All of them will obviously have some financial implications, so building it into your personal life is a necessity. In aligning business goals with business cash flows, right? Business goals, business cash flows, and that excess cash flow when it is available for your personal goals, making sure all this is happening. Make sure that you have an emergency fund. This person who died had no emergency fund. In fact, his borrowings were much greater than the cash that he had on hand. So maintaining emergency fund of 6 to 12 months, in fact I would say 12 months, because businesses, things going wrong are very high, because even if something were to go wrong with you, the business income could fall. I mean, for a person doing a lot of travel and doing a lot of sales, even a temporary thing like a major fracture of one of your legs could mean that you may not be able to travel for 1 year, right? So those kind of things will be there. So 12 months living expenses in a liquid fund, savings account, etc., right? To handle business volatility. Don't worry about taxation now, we'll talk about taxation later. If your monthly expenses are 1 lakh per 1 lakh, then you target 12 lakhs. So if your monthly expenses are 1 lakh, your EMI is 50,000, then target 18 lakhs, right? Start your retirement planning, or start enhancing contributions to your provident fund, your PPF. Your wife also does a PPF, right? Things like that. All that is going to help you in your personal financial freedom. I'm not going to say it is going to help you to retire early, but the corpus that you're creating for your retirement could be a PPF also. It can't be only PPF. Then have your investment strategy. Trying to convince a businessman that he should remove money for putting into equity is very difficult. And if you think he's already taking a lot of risk in his own business, which means his own business is like equity, then he needs to have more debt. For example, this man doing business, if his wife is a professor at IIT, fairly obvious that he needs to worry less, because she is going to get a continuous salary, maybe a pension, maybe she's going to work till she's 68. That kind of financial security is there. But if she is a housewife and she's not contributing financially to your retirement or your financial freedom, then you need to obviously save and invest more, and you have to save and invest more conservatively. You have to have more debt instruments in whatever you're doing, right? So then investing in real estate, you think twice before you buy a property for the office, for you to stay, etc. Make sure that you, if you go and search, you will find the 3, 20, 30-40 rule for buying a house, which means it should be not more than 3 times your annual income. You should make a down payment of 40%. You should have a loan which is only for 20 years, and all your EMIs put together should only be 30% of your take home salary, right? Whatever amount you're taking home. Allocate a little bit of gold in your portfolio if you have not already done. If you have not done, it does not really matter as long as you put into assets like multi-asset fund. That will you are buying some gold every month if you do an SIP. Understand what is the systematic investment plan, and just like you're taking away 10,000 for your 1 lakh for your monthly expenses, make sure that you take away something for your business and for your personal expenses, for your personal investment. So out of that 1 lakh, you're going to do some SIP, 10, 20, 30,000, whatever you can afford, and you're also going to do a personal SIP in your business, and that money is going to lie in a liquid fund. This is for emergencies for the business, that is for emergencies for the personal life. You can combine the two. If you're creating a say 2 lakh per month and so 25 lakhs of your business money is lying in a liquid fund, that's enough for meeting your personal expenses. I'm assuming for a minute that you are a sole proprietor, right? And I had started by saying don't mix business finance and personal finance. Having said that, for emergency cash etc., keeping it in one location makes sense. Make sure that your business is growing and your personal wealth is also growing. Avoid over investing in your business. Make sure that your children understand your business. They sit and talk to you. If your children are more than 10, 12 years old, they understand what you're doing. They understand what is a majority stake, why you're running it. All this is important. And also, if you put away some money in equity or a multi-asset fund, maybe after 2 years, 3 years, 5 years, that could be useful for you to buy your neighboring shop or your neighboring house, whatever. So that is all. Your investment also helps sometimes in your business. In fact, many times for businessmen. Maximize your tax benefit, whether it is 80C, 80D, whatever, whether it is available, not available, you're under the new system, old system, but pay attention to tax. Sit with your tax consultant and try to understand what he's doing, why he's doing, right? So all those things having gone away, of course there is still NPS left, there is still home loan which you can get as a deduction. So understand all this, understand clubbing, understand why instead of paying your parents every month, it's better to create a corpus and leave it there and make sure that they earn out of it. So this is taxation. So understanding taxation from investment point of view, from clubbing point of view, all that is also important. New tax regime, old tax regime, make your choice. But if you go to the new regime, if you're a businessman, I'm not sure whether you can come back to the old tax regime. Business income will be taxed at an appropriate rate depending on whether you should be a private limited company, LLP, one-man company. Check out all that. I mean, do the structuring based on what your chartered accountant tells you also. Insurance, make sure that you have enough adequate health insurance, maybe 15-20 lakhs plus super top up, or say 5 lakhs plus 20 lakhs super top up, whatever combination you need for health insurance, take it. You need some kind of term insurance, because if you're only 40 years of age, you got another 20 years when you're going to earn money, and your family should not be worried too much about your health and all that. They will of course be worried, but then in case you were to drop dead, then the family's goals of your children studying abroad or whatever it is, those cannot be impacted. So take adequate life insurance, at least 10 to 15 times your annual income, especially if you're young and you're not earning much. Make sure that you have adequate term insurance, because your maybe dependent parents, your wife, your children could also be devastated by losing you, but you don't want them to spend the rest of their life wondering from where the next meal will come. So make sure that you have adequate insurance, you have adequate you're putting adequate money into your retirement or into your being financially free. Debt management, avoid high interest paying debt. I am one of those old fashioned people who say don't buy something if you don't have money. Don't have to borrow and buy anything. I was anti borrowing for a house also. I was anti buying a house. That's completely different. But make sure that you don't take interest, very high interest cost, because business you will have to borrow at some stage for doing something. Maybe you have to pay salaries and you don't think your cash flow is happening before the 7th, and you normally pay salary on the 1st. So then yes, you will have to in an emergency borrow. So do borrow, but avoid high interest costs. Separate business and personal completely. Don't combine the two. You have your credit card, you will have your FICO score or whatever it's called, and that will help you borrow there. But in your business, you may have to borrow, giving personal guarantees. Make sure that you don't mess up the whole thing. Prepay loans if you have surplus cash, because consider prepaying the high interest or the long term loans first, and then that's the way to reduce your debt burden. Making a will, estate and succession planning. I've made enough videos, so I'm not talking much about that. Financial discipline and monitoring. Track your cash flows, do an annual or a quarterly review with your children. Avoid speculation. Anything which looks like a get rich quick scheme, it is a get rich quick scheme. You can't get wealthy in a jiffy, but you can get rich like this, and you can be unriched like this. So be careful about it. Consider the cultural and contextual considerations, family obligations, inflation awareness. Make sure their children understand inflation and they don't say, oh my god, those days interest rates used to be 18%. Yes, but inflation was 20%, so you are actually losing money then. And it is not now that you are losing money. So be aware of the rupee depreciation, be aware of inflation, use technology, use platforms like, I'm sure you're using platforms to watch this, so there will be some platform in which you're learning how to invest and all that. So learn and then do, right? Stay well informed, avoid good sources like this channel of yours, and then look for the details as to how to use all this properly and make sure there is no scam. So what are some of the common mistakes that I see among business people? Over leveraging, too much borrowing way beyond their capacity to repay. Lifestyle inflation, when their income goes up a little, they dramatically improve their or increase their lifestyle. Lack of diversification, all their money is in one business, which is their own business, which is very good, but it can hurt sometimes, right? Ignoring insurance because they say, oh god, this insurance salesman is so bad. So I ended up advising this to for a businessman earning about 1 crore annually, and about 2 lakhs is his monthly expenses. So I said an emergency fund of about 25 lakhs, invest every month, at least take 2 lakhs out of your business and do an SIP of 1 lakh in some equity mutual funds, balance funds, multi-asset funds, whatever. Insurance cover of 2 crores, a 15 lakh health cover he had already, that I didn't have to give any advice. Retirement kitty, how to build, I spoke to him separately. Tax savings is gone. Consult a financial planner if need be. Engage a SEBI registered person. Make sure he or she is not taking you for a ride. Thank you.